It's Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily technical analysis show, where we do the market analysis and see what happened with the day in the markets and learn from it and plan for a better trade for the next day. So, what kind of day we had? It was very volatile. It was weekly expiry, and we were responding to the US Fed interest hike rate, the news that came last night. Right. So let's get in the charts and see what does the charts say. And let's get the Nifty first. And the daily charts is what you're seeing. This is analysis for September 23rd, Friday, tomorrow, 2023. So look at this. It's another spinning topper. Small body indecisiveness continues. Market has lost 0.5% out to 88.5, and Banknifty has lost 573 points. It's 1.39. The banks are getting weak. We had M pattern that is in the Banknifty also now appearing, and Nifty also has an M pattern, and we have to be cautious about this neckline zone on both. A breach of that could have the width of that double top. Equal amount of downfall is possible if that happens. There's no confirmation yet, but there is a double top pattern that's emerging on both the indices. At the same time, we are at a previous resistance zone, which is acting as kind of a support zone on both the indices, and therefore there is a possibility of a bounce about that can happen. And if it was closed above the 20 moving average support, so that also is another reason for a support to be taken and bounced up. And also Banknifty is also at a support of the RSI, almost always just slightly. That will also be support. So there is a possibility of a bounce up that is there. It's not ruled out, but overall the patterns are indicative of bearishness primarily. Right? 88 points and 573 points lost in Nifty. Intraday was very volatile. It was V-shaped moves and 1 to 2% of downfall, then recovery, and then again giving up half of it. That's how it happened. Double top is there, 20 moving support is gone, and weekly trend line closure inside continues. And indecisive Banknifty weekly chart, weekly candle is what is getting formed. Let us see what happens tomorrow and then conclude on the candle. Support resistance is 17,839, producing higher resistance. On the Nifty is what we are talking about. 17,992 is the next level of resistance, the upside previous week high. And 17,380, 430, 470. So 380 to 470, that zone is a very good support. It's consisting of the gap support as well as the previous low. So if that's breached, then you have 17,155, which is the next support on the Nifty. Banknifty 41159 is resistance on the upside. Then 41,678 it is, and 840 is the all-time high. These are the two resistance zones on the upside. 4266 is the support downside, and 39,572 support if that's breached. Right. So making all of these levels for the new week's expiry that's starting from tomorrow. Right. But that next week's expiry is a monthly expiry. Volatility, there's a contraction in the bands that can be seen very clearly on both the Nifty and the Banknifty. Right, Banknifty also has turned sideways. The problem is the 20 median support of the Bollinger Bands is lost, and Nifty has closed below it, so it's a bearish bias to that. Momentum has lost the grip on both. It is clearly momentum is in the sideways zones, losing the 60 RSI bullish zones, fallen from there after resisting and trying to come up above this after a dip. Banknifty also has slightly slipped into the bear zones, not fully, but no, it's on the edge. There is a possible divergence that could be seen where the momentum is falling and the price is rising. So this could turn out to be a bounce. It's known as positive reverse divergence of the momentum, which is bullish in nature, and thereby it could take a support of the momentum RSI 60 nearby zones and then bounce up. That is another possibility similar to the CIP that we talked about. So momentum is not that bad in Banknifty, but Nifty is falling. Today it was momentum falling further down for both. Trend has not crossed over the Banknifty in the bear zones yet on the short term, but Nifty is already crossed over in the bear zones, and it is with rising strength. That means bearishness is increasing. Banknifty bullishness is reducing, falling strength. 7:15. Bullishness is falling, and that is with falling strength. That means Banknifty still seems to be okay from the trend ADX indicator perspective. Momentum RSI, also Banknifty is on the edge of getting into this, falling down the sideways momentum. It just slipped just into the sideways, once you can say. So that's a summary. Nothing positive except the two factors that the divergence on the Banknifty could create a bounce up and the CIP bounce could be possible. Trust is all bearish in nature. Index just fell slightly to 18.81 nearby, near to 20 zones. So be extremely cautious. Slight fall of 3% has happened today. Short buildup is what happened in the open interest and short in both indices. Options or OI does not make sense to make an understanding of the levels right now because it's a new week that's going to get traded actively from tomorrow. So at least up to tomorrow's trade, the options OI levels will make some sense. As of now, it's very wide range of 3,000, 4,000 points. 19,000 is where the highest call rating and 16,000 is where the highest put rating is. In 40,600 and 41,000 is where the highest put and call rating support and resistance seen for the September 29 monthly expiry. So don't take too much into these levels because it's active trading for the next week is coming starting from tomorrow, right? Read these levels of option high from tomorrow to make more sense. PCR also makes more sense to see it from tomorrow, but overall it's very closer to the bullishness and not far away from it. Sector will watch auto and FMCG perform today. Others are all flat and less than 4.5% of movement is what happened. FMCG is the only sector that's bullish on the short term. It is clearly in the bearish zones. It's also all underperformed, also except TCS, which is having a slight green, but it was closing flat. HDFC Bank is the only stock that is still maintaining some kind of bullish momentum in the short term. Infi, TCS, Reliance also all have short term bearish momentum now, right below the 40 RSI, which is not good. So Fyers is concerned, second day of consecutive buying, selling again, 2,500 crores of selling, big selling has happened following the Fed interest rate hike news that came out yesterday. Small buying only by the DIS, only 263 crores of buying has happened from the DIS. So institutions are not supporting is a worry. Right, actually this is a worry. Right. Patterns and price patterns and OI is a worry. Right. Sector is not performing across the sector. None of the heavyweights showing strength is a worry. Crude oil is falling, but it has spiked up again another 3% today to climb over the 85 levels. As long as it stays below this 90 levels, at least it should be fine. Dollar is the real concern. It is broken out to 111 kind of levels, 20-year all-time high levels, and USD INR is the 80.188, 81 kind of levels of all-time highs. And this is the biggest worry. Right after the Fed interest hike rate, dollar shot up like anything. Gold is a hedging instrument. It has breached the support and bearish zones. It's not holding, it seems like it's falling down or consolidating. Slight up move is there seen today. As of now, SGX Singapore index is showing flat and all the US indices also flattish. Red is what is showing. But you'll have to see this tomorrow pre-market. But make a note that the US indices are all bearish and then breach the major trendline channel area and then maybe trying to consolidate there and climb back into it, or it may be falling to the next support level below the 30,000. Keep a close watch of that. Big movements could be in back of markets as well, like it had done. But every time we get big sell-off, there is buying that's coming in and then we bounce back. So resilience is there, but how long this resilience will hold on is something that we do not know. If there is a big crash in the US market that's continuing and the bearishness increases, then we would have an option but to react to that and follow that. Right? So you have to be cautious. It's a very crucial point. Jobless claims data is also coming. US Accenture guidance on the IT index impacting data may be coming out tomorrow. Jobless claim also may be coming tomorrow. So US Fed interest rate is digested by the market now. Right? There will be new local cues or the global cues that may be looking forward. Right? Stock picks to Armindo Pharma is a short because there is some kind of head and shoulder down that could be happening. Trend in both the trend and momentum are there. So price pattern also will favor the price. HUL is Hindustan Unilever is it's a FMCG stock, and it's breaking out, and it's in a trend line channel. Alright, so there is a possibility that it can break out. Right, give swing opportunity. It has given a good bullish candle today. It's in a very long trend line channel, and it has been zigzagging this channel for several years now. Because it's 2017 since the channel is made it. So now there is a scope of movement till this 22,850 kind of level. So that can give good short swing trade. Right. Momentum is also medium term also has got the bullish. Trend is also bullish. So HUL, Hindustan Unilever is a long trade, and Aurobindo Pharma is also bearish. Aurobindo, I think that is the name. Aurobindo Pharma is in the bear zones. Momentum is in bear zones. There is a trend. There is a neckline of the head and shoulder kind of pattern is breaking down. Momentum and trend both are trending downside. It can give some opportunity on the downside. Right? Now, after having seen all the parameters, let's just wrap up the market view. So, market view for me for the next day is mild bearishness. Reasons? Before getting the reasons, let's see what happened today. It's volatile. It is a volatile day. Your Nifty lost for the momentum and lost some points also. Right? Both indices are very volatile, and both have closed in a small body, which means indecisiveness is there. The market weekly, it's having a very bearish pattern that's forming. We'll come to know about that tomorrow. Gravestone, Doji, indecisiveness is bearish in nature, and the weekly on the Banknifty is what you see. So it's all increasing the bearish. So trendline channel inside, but Nifty is closed. Banknifty is closed about it, maintaining the closure about, but candlestick is not bullish at all. Indecisiveness, the US market is losing grip, and trendline breaches have happened. This is not ahead. This is after the news has come. It has turned red, further breached. So several reasons that the brokerage is not good. Means options oil data we are ignoring, but momentum trend both have fallen. Fyers are selling yesterday today a big, and pattern is the trend and resistance is there. Bollinger Bands are bearish with median 20 moving support lost. Banking index is not helping anymore. Weekly banking index, candle is doji, all this. But still there is hope that there is a CIP bounce and a divergence on the Banknifty can lift the market against possibilities there. VIX is also higher, that's also negative. So reasons what the charts and the data is saying is mild bearish. Hope this helps you to frame your view for the next day and your trade plans in some way or other. If that helps you somewhere, consider hitting the like button, subscribe and share to maximum. Please don't forget to subscribe. We have very few subscriptions. Appreciate your help. Thanks for watching. Happy trading, happy learning, happy investing.